900 point swing today. The Dow Jones was up 350 in the morning and dropped down to 550 points during the day, and I think it closed at around 250 points down. Crazy movement. So I'm just tired of trying to make sense of this. All I know is that the economy is doing well. I don't understand why all these stocks are dropping. I'm really happy that I know for a fact it has nothing to do with individual companies, so that's very comforting. But I want to know what's the lowest point. I'm tired of buying and everything just keeps going down. But I definitely want to buy some stocks right now because I see them as discounted. But just too many choices. I don't know which ones to buy. They all look good. Should I focus on the ones that look really good, don't pay dividends? The ones that have good dividends don't have that much growth potential. Definitely tempted to buy Amazon. It actually broke 1500. It reached 1495, I believe, today. Yeah, today's range 1495. So this is a stock that not even 2 months ago it was trading at 2000. It's already trading at in the 1400s, we can say. So sadly, it doesn't pay any dividends, but it's definitely a good growth company. It's got crazy revenue, crazy profits, taking over e-commerce. So definitely confident in buying, or definitely confident in putting my money in this stock. It's just a matter of, should I put it in this stock or should I put it in another stock? You've got Facebook that hit 139 today as well. So I bought this stock last at 145, but would definitely want to buy more of it. It's definitely a $200 stock. I mean, Facebook and Google have all the attention. So whatever Facebook is going through right now, I'm confident that they're going to fix. They have the skills to fix it. They've got Instagram that's growing and becoming more and more popular. I think even it's where most of the engagement is. So people will continue to advertise, and ad rates will continue to go up. So their revenue is going to go up, their profits are going to go up. They haven't monetized WhatsApp yet. Not sure what's going to happen there, but there's still potential with WhatsApp. So very confident in Facebook. Definitely, I see it as a buying opportunity. I want to buy more of it, but I already bought at 145. Probably the next time, I don't know, I guess 130 would be the next target price. Then I want to buy Amazon. I'm sure there's an ETF that covers these tech companies like Google, Facebook, and Amazon. But I would prefer to buy these stocks individually so I can benefit from the growth of each, because they probably won't go up at the same time. Maybe Google and Amazon will go up at the same time, but Facebook, I think, will be separate. Alibaba reaching 131 today. This is a stock I bought at 164. So this is another stock I want to buy. Google reaching 995, so breaking 1,000. Doesn't pay dividends, sadly. You probably heard the packages that were sent to the presidents and to CNN, bomb threats, and the guy who shot some people at the synagogue over the weekend. So just a bunch of bad news in the media lately. It's almost as if they're controlling the market. They want to add fear to the market. It's a thought, who knows? All before the American elections as well. All I know is that the market is going down for reasons outside of individual companies, and all you're hearing is bad news in the media. So it could be just someone's trying to control the stock market. Regardless, I really don't care. I just want to buy some stocks. Just so many choices, just a matter of getting the liquidity. So my American Express card is offering a 2.99% interest rate on a balance transfer for 12 months. So I think I'm going to take it. It's very risky. I don't recommend doing that. Borrowing money to invest, especially if it's for a limited period, because that means I would have to repay it in 12 months. After that, the interest rate goes above 20%. But I don't want to miss out on these stocks. So I think it's the only way for me to participate in these discounted prices. I'll just have to make sure to buy things that are safe and to make sure that come 12 months, there's something that I can sell so I can repay the debt. Now there's some sort of fight going on between Apple and Qualcomm. Definitely watching Qualcomm stock. I really like this stock. If it drops in the 50s, definitely going to be another buying opportunity. I bought this stock several times and sold it at a profit. Even could have kept it longer and made a better profit. But regardless, I really like this stock. I'm definitely watching it. I'm hoping they win their battle with Apple. But at the same time, I want the stock to fall so I can buy some Qualcomm. So yeah, like I said, what's going on in the market has nothing to do with the individual companies, because like corporate earnings are good, are high. So if companies are profitable, what's the problem? Why are the stocks going down? So here are some stocks I want to buy. I want to buy Pizza Royalty Corp or Income Fund because it pays close to 10% dividends. It's at a 52-week low, and it's even at an 8-year low. So in the last 12 months, it traded at $17. So it's got good growth potential, and also it pays dividends. Hopefully it sticks to their dividends, but it's been very consistent in paying the dividends. And here, this article on from Motley Fool here says that this is a bargain buy, and it's just a matter of time before the stock rebounds. But it looks like they're paying 100% of their earnings, which explains why the retained earnings are negative. It's got a PE ratio of 10, which is low, and it's trading near its book value. So rarely stocks trade near their book value. And they've got a strong brand. General Electric and Facebook are coming out with their earnings this week, so curious to see what's going to happen with this stock. I'm hoping GE goes up, and Facebook, well, we'll see. If it goes up, great. I don't think it's going to go up enough for me to sell, but always excited to see what's going to happen. Now this is a great dividend stock. Enbridge reached 39.72 today, closed at 40, pays about 6, even more actually than 6% dividends per year, paid out every quarter. It's like one of the top 4 market caps on the Canadian Stock Exchange. When your target price is 53, so you got good growth potential and you got good dividends of 7%. Everything is positive in this company. Almost every report or article I read on this stock is positive. So this is an interesting one. I could also buy this, and it would be perfect if the market continues to drop. Well, at least I'm collecting dividends. Now this is a good one as well. This is a mutual fund on the Canadian Stock Exchange. Pays 10 cents per share, very consistent on the dividends. So it's going to be around 11% dividends per year on that price. It reached today 10.52. This is a stock that normally trades close to last year. You could see the high was 12.08, but as you can see here, it's always trading at around 11.8, 11.9. It doesn't move much and just keeps paying dividends. And right now, the price of the stock has decreased. So definitely at 10.5 or even lower would be a great buying opportunity. I'm definitely interested in this stock, but like I said, it's just not enough cash and just too many buying opportunities, and just a matter of choosing the right stock, or probably the best stock. I have to be picky because I'm not able to buy everything I want to buy. But this is definitely on my watch list. This is definitely a strong one. So Cascade, another Canadian company that makes toilet paper and tissue and a bunch of paper stuff. Pays very little dividends, 1.5%, but it's got good growth potential. 1-year target is 16, and it was trading actually at like 13 3 months ago, and in the past year it was trading at 16 as well. So it's got good growth potential with a little bit of dividends. Personally, I don't think I'm gonna pick it out of all my choices, but it is worth mentioning. And of course, you've got Bank of Nova Scotia. You can't go wrong with a big Canadian bank. Almost 5% dividends right now. 1-year target 86, trading at 69. Personally, I'm not going to buy it at 69, but maybe at 65 I could buy some of it. I already bought some at 71. Bought some at 76 and 71. If I do buy more of it, it'll be around 65, but I'll probably be buying something else before I buy this stock again. Now this is something that I really want to buy, but I'm very hesitant because it doesn't pay dividends, and I'm not too sure on the growth potential because it's not very profitable. Groupon, it's not very profitable. It's got good revenues, but it's not profitable. Although it was trading at 6 in the last 12 months, and it's got a 1-year target of 5. Right now it's trading at 3, 52-week low, of course. I mean, even in the past 5 years, it's considered a discount, but not too confident in the growth potential. So not too sure if I'm going to buy it. If I do, it's going to be a little bit risky. I might have to hold it long term. I don't think it's going to disappear, but I don't know how it's going to recover, how it's going to start being profitable. What I do know is that it's not the first time it reaches 3 and goes back up to 6. So it looks like it could do this. It could do the same thing again. And you've got AMD that's continuing to drop. Definitely worth watching. This was trading at 32 not long ago. Right now at 16, trading at 16, so half the price. 52-week range was 9 to 34. I'm personally not buying at this price, but definitely watching it. If it reaches probably 12, I will definitely try to buy. But worth mentioning for sure. You've got MasterCard also that looks really good. I mean, this is a stock that's just goes goes up in a straight arrow. You can see for the past 5 years, it just keeps going up. The small drop is probably an opportunity for me to get in. So as you can see, it was trading at 222 September 24th, and now it's at 191. 1 year target price is 234. It pays very little dividends, not even worth mentioning, 0.5% per year. But in terms of growth potential, it's, as you can see, it's a straight arrow, it just keeps going up. As you can see, just so many choices. But I mean, if I had to choose 3 stocks that I would focus on right now, would probably be Amazon. Really want to get into Amazon. And then as well, Google, although they don't pay dividends. Facebook as well, but if it drops below 135. And then in terms of dividends, probably more Enbridge. I already have a lot of Enbridge, but it looks like I could buy more of Enbridge. And also Kanoa EIT Income Fund, probably at 10.5. See, today it was at 10.52, but I didn't place an order. I didn't even think it would reach that number today. But I could probably buy some of this because of the dividends. It pays 10 cents per share, and it's very consistent in paying out the dividends. And it invests in, it's an ETF that invests in big name companies, but it's able to provide monthly distributions by selling covered calls. So obviously, if all their holdings are dropping, their ability to sell covered calls will decrease, but they're probably buying more stocks at a discount and then selling covered calls on these stocks. So yeah, so these are my, I guess, 5 choices, or my 5 priorities. But yeah, first I have to get the funds, and like I said, I decided I'm gonna get that balance transfer from Amex at 2.99% for the next 12 months, and then just figure out a way to make sure that there's something I can sell after 12 months so that I can repay the debt. If you have any questions, leave them in the comments below. Any stock tips, leave them in the comments below. If you've got any interesting ETFs that pay good dividends, leave them in the comments below as well. I'd be interested. And as always, if you're going to open an account with Questrade to trade on the stock market, use my referral code in the description below the video so you can get between $25 and $250 back. Thanks for watching.